It's been a bit of a crazy day, last couple of days for the markets, especially Bitcoin and crypto, with Bitcoin up and down and up and down. Stocks are, were a little bit flat yesterday and are down today. So let's take a look at what's going on. It's about 3 p.m. Eastern Standard, so another hour into the close. Like I always say, the momentum into the close will tell you a lot about what's going on and what investors are thinking and what investor sentiment looks like. The Dow down almost 1%, S&P down 1.1%, NASDAQ down 0.78%. Big news of the day is mortgage demand falling to the lowest levels in 22 years amid rising rates and slowing home sales. And like we talked about the other day, I don't know if you saw my housing update video, but obviously interest rates are inversely related to housing prices. So as rates go down, house prices go up. As rates go up, house prices go down. We've seen it over and over. This will be my third housing cycle that I've been through in my career. I bought my first house in 1990, and that was a very difficult time for the housing market. And then I went through the 2008-9 housing bust. The peak of the market was 04-05. And then now we have the housing bubble and correction that's ahead of us. With the inflationary environment that we're in, rising interest rates, gas prices, energy costs, all the things that are going to affect the consumer, affect housing, things like that. And, people buy payments when they're buying houses, right? So just makes a lot of sense. And when rates go up, it doesn't make sense to refi. So a lot of damage in the mortgage industry right now for mortgage brokers. The SEC chief, Gary Gensler, has unveiled his plan to overhaul Wall Street stock trading. Good luck with that. So we'll see how that works out for him. And then, of course, the crypto bill is getting debated in Congress. We'll see what that's all about. Big eye, a lot of eyes on stable coins, things like that. So we'll just have to see, how those things shake out and how they affect the crypto markets. Again, the more regulation and clarity you have and guidance, the more stability there is in the market, the more that more capital will come into the market, which is better for adoption across the spectrum with retirement funds and investment houses, putting the retail retirement investor into the markets, allowing them to participate with, large cap alts, Bitcoin, Ethereum, things like that. So we do need regulation. We do need clarity to bring more capital in the space. But here's the last 24 hours on Bitcoin, up, down, just kind of this, long and short liquidations going on here. And like we talked about, what happens is everybody wants to go short there when they should be going long. Everybody wants to go long here when they should be going short. So I don't know why, I don't know why they keep doing that. But if you look at, Bitcoin long and short interest, you'll see that it's almost always 50-50. It's really interesting how that works and, what people are actually thinking. And it's, a great liquidation range and zone, and it's a great profit generating zone, liquidity generating zone for the market makers, right? They make their money in the times of volatility. But when you zoom out, it's pretty flat for the most part. And we'll look at it on the 4-hour. This is Bitcoin, kind of ranging here. Look at it on the daily. The big question is, what next after here? More downside or more upside potential? And, you have to look at what are the probabilities, what's the likelihoods given the macro economic environment. And, the big test will be on Friday when the CPI index comes out. A lot of analysts, economists, and politicians are saying that a few of them are saying that inflation has peaked. And as we all know, that just makes zero sense. Things are getting more expensive. Gas is going up every day. And when gas crosses the national average of that $5 threshold, and in most areas, I know out west in California, gas is already over up in the sevens, and some other areas of the country where gas is really expensive, but on the national average, in the heartland of America, when you see gas get above $5 a gallon, that's a psychological threshold for people that people will just start losing their minds. And you're going to see a lot of, backlash politically for that, economically for that. And it affects everything all the way through the supply chain, right? Because as fuel prices go up, everything gets delivered at the end of the day from fuel-driven vehicles. So whether it's the mail, UPS, Amazon, whatever it is, delivering packages, takes freight to get these things across the country, takes fuel from the air to ground transport to ultimately get them, to your house if you're getting stuff delivered. So that drives costs up. Everybody's raising their prices. Food's up in restaurants. I have a lot of friends that own restaurants. I have a lot of friends in the hotel business. I have a lot of friends in retail. It's just everything's up across the board. And it's getting to the point to where people are having to make choices and starting to cut back, which ultimately affects the economy. So those are things that you have to kind of watch out for. That's why it's, realistic to expect, more downside potential, retest these lower ranges, kind of like last summer. Bitcoin could kind of range around in here for a while before it finds some sort of, a stable bottom. And you really can't expect markets, if we look at traditional markets as well, kind of dancing around doing the same thing, trying to figure themselves out their next move, waiting for that CPI read to see what the Fed response is going to be. If inflation's worse than predicted, then the markets will probably drop a little bit and retest these lows, maybe put in a new lower low, because that's what we're on, is these lower highs, lower lows. Looking at the S&P right now, the dollar topped out, dropped, and it's working its way back up. So if we get a higher than expected inflation read, then markets will probably dip some more. Here's oil, continuing to shoot back to the all-time highs. They can go much higher, as we've seen in the past. If you look at oil, let's take a look on the weekly. We've seen oil as high as, I think the highest we've seen is 140. Yeah, 145 a barrel. So potentially working its way back up to those ranges. And, if inflation is better than expected, then you can, you'll see a nice little rebound in the markets. But, no bottom, permanent bottom expected at this point until we get through some of this inflationary environment, get gas back down to $2 a gallon like it should be, food and energy costs, across the board down. You really can't expect any kind of rebound until then. And again, everybody's watching the 200-week moving average. Doesn't mean it has to do that. It's just what it's done in the past. And, this is a new environment, a lot more capital in the space, and a lot of capital spread out throughout the space. And of course, watching the Gaussian channel turning red. Question is, will it stay red, and will price be stuck in this Gaussian channel for a while? So those are the things that we're kind of looking at and watching. And, again, if you look at the price action of the markets, they're all kind of doing the same thing. Major altcoins, here's Ethereum, in this critical area of support, trying to hang on. Same thing with Avalanche, on its last line of support here, trying to hang on. Same thing with Solana, last area of major support. Matic, everything's pretty much in that boat. Cardano, a lot of talk about Cardano and things that are happening on the Cardano chain. So we'll just have to see what happens there. Might get a nice little pop out of it. But at the end of the day, we are still in a crypto bear market, crypto winter. So the altcoins, major altcoins, and especially the smaller cap altcoins could definitely drop another 30, 40, 50, 60% from here. Some of them 90%. There's a lot of capital spread out through the space. Let's take a look at Bitcoin dominance, because that does continue to climb. And as we've seen in the past, dominance can get a lot higher. And that's where it was last year, back in January. And then if we look at the summer, right in this area, this is where Bitcoin bottomed and worked its way back up in the summer, and the alt season ran. So that's where we had, if we look at total two, this was our alt season right here that we were kind of watching for to see if we had any kind of a retracement here up to these higher levels. Altcoins could have run if Bitcoin would have retraced, but this was the retracement area altcoin season. So we'll just have to wait for the next one and wait for those next setups, which is what we are watching for. So these are the things that I'm looking at. Obviously, Friday is a big day, waiting for the inflation data to come out. Some more earnings, nothing real critical there. Big thing is inflation. And obviously, we know what the Fed's going to do. They're going to raise rates anyways, regardless of the inflation print or read. They're definitely going to raise rates. If inflation's really bad and really surprises on the upside, being higher than expected, the Fed might get a little bit more aggressive than a 50 basis point rate hike, but chances are that's all they're going to do. They're trying to be as dovishly hawkish as they possibly can. So there's a new term for you, dovishly hawkish. So these are the things I'm looking at, and I will see you on the next video.